In this video, we're going to talk about Novavax. If you're considering buying Novavax shares in your portfolio, then please keep watching this video until the end because it'll cover many factors that should be considered regarding your decision on buying, holding, or selling the shares. During the most recent trading session, the stock opened at $165.44, then closed at $173.69. The lowest point at which it fell to was $164.58, and the highest point it rose to was $177.64. Compared to the current price action, its 52-week low was $42.14, and the 52-week high has been $331.68. The current trading volume of Novavax is $3 million, compared to the average volume of 3.6 million shares. The trading volume of Novavax suggests that the market is in the anticipation and wants to slow down the pace at which they're buying Novavax shares in order to adjust to the shifting investment environment that we can all see. The demand of the product may only maintain itself at the current volume for another 6 months in the case of many countries, and at the same time, Novavax proved its capacity to come up something that other pharmaceutical giants didn't manage to develop, despite having a lot more clout and resources than Novavax. The future price tendencies of Novavax can meet some initial pullbacks as soon as the global demand is met or decreases. But that is only the end of the first phase, as the second phase of investment in Novavax would begin by considering the company as one of the giants in the sector, meaning that the perspective at which we will consider it will no longer be the same. I think that the long-term potential of Novavax is going to be great, because it'll have more economic and intellectual muscles to compete and develop new products that the market will need. From the price actions pattern, it would be up to you to determine if the company has enough steam to go higher. Personally, I believe that it does, but it's limited. Now, let's take a look at the enterprise value of the company, which represents how much the company's assets are worth once the debt is removed. The EV of Novavax increased almost 3 times compared to where it was a year ago. The company is now valued at $11 billion, compared to a valuation of $4.8 billion in Q2 2020. This significant increase of enterprise value is due to the company's innovation capacity and its newly acquired competencies in developing products that meet a timely need of the market. We must remember that the company was a relatively small startup not that long ago, or at least considered as such, and that it really surprised many investors that it was able to compete against some of the giants of the sector. Another outside signal to observe is the total number of shares outstanding. Generally speaking, if the number of shares keeps increasing, then it suggests that a company is selling equity to pay the bills. The company's number of shares, of course, increased, but moderately, from 61 million shares back in 2020 to 74 million shares in the present day. This increase is very moderate compared to the change of company's value. So overall, shareholders have had a very good run with the company if they've been holding Novavax for the past 12 months. Generally speaking, my recommendation of Novavax is to include it as a long-term potential of your portfolio, because it does have the potential to become the next major player in the sector. In the meantime, we should also be careful about the current price levels, which may be higher than where it's going to be within the next 12 months, when the market moves on to other hot spots. This is why Novavax should be bought not as a day trader, but with the mindset of an investor, willing to wait for years before it pays off. In fact, we don't have to project the price that far in the future, simply because even now, the price of Novavax is under an increasing amount of skepticism and pressure about whether it can hold its ground. This is why we should structure the position accordingly when buying it. Meanwhile, the financial market's overall sentiment is still relatively reluctant at putting more money in the same genre of companies. Following the stock market craze back in 2020, the stock market decided to pull back from disruptive and innovative stocks in general, covering biotech, electric vehicles, and anything requiring keynote presentations. This wave of pullbacks can be explained in two ways. The market needed to park their money into niches in order to avoid heavy losses. And since many of those niches grew multifold since then, many of them decided then to lock in their profits or to simply cash out without incurring too much loss, and didn't mind the massive sell-off that this would initiate. The second reason was because the market began to realize how overly exposed investors have become to the growth stocks. These are the reasons why stock ultimately collapsed for so many companies that everyone was talking about. In the current circumstances, the recommended approach is to be careful when buying those stocks. On one hand, the stock may be able to climb back on its own when operations begin to blossom. On the other hand, the stock may simply increase because it fell low enough. This means that in the current market settings, we need to tread the water carefully regarding buying stocks. Many of them became overpriced during the past 12 months, and we need to wait for another few weeks or month before the timing is ripe to increase our holdings. With that being said, there will be sudden events to create a lot of volatilities for individual companies, and this is why it's always recommended to hold a small position in those stocks in case you fear about missing out. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.